Hi, I'm Chris VanHart, one of the wealth advisors here at Advent Partners. May the 4th be with you, and hopefully with your portfolio too. Yes, it's Star Wars Day again, which feels oddly appropriate for a week in which the Federal Reserve tried to project calm while chaos brewed beneath the surface. And a band of tech giants used the force of AI spending to beat expectations across the board. No Death Stars were blown up, but a few earnings estimates were. Let's break it down. Starting with the Fed, who last Wednesday held rates steady at a target rate of 3.5 to 3.75%. No surprise there, but the drama was in the details. Four officials dissented from the decision, the highest level of internal disagreement in over 3 decades. Three of those four dissented not because they wanted to cut rates, but because they wanted the easing bias removed from the statement entirely, signaling they have no appetite for the cuts anytime soon. And for fans of leadership intrigue, this appears to have been Jerome Powell's final meeting as Fed chair, as Kevin Warsh's nomination advanced through the Senate Banking Committee. Think of it as the empire installing a new emperor. Markets are still figuring out what that means for the galaxy. Now to big tech, which had its biggest earnings week of the year. Microsoft, Meta, Alphabet, and Amazon all reported after the bell on April 29th, and every single one of them topped revenue expectations. Microsoft posted a revenue increase of 18%, led by its AI business, which is up 123% year over year. Alphabet may have been the most impressive of the bunch. Net income jumped 81%, driven largely by Google Cloud, its strongest quarterly growth rate since 2022. Meta reported Q1 revenue of $56.3 billion, up 33% year over year. Earnings per share came in at $10.44, up 62%, with daily active people across its family of apps reaching 3.56 billion. Amazon shown on the cloud side. AWS sales grew 28% to nearly $37.5 billion, its fastest growth rate in nearly 4 years. And rounding out the week, Apple reported revenue of $111.2 billion, up 17%, marking Apple's best March quarter ever, with iPhone setting a new March quarter record driven by demand for the iPhone 17 lineup. Apple also authorized a new $100 billion share buyback and raised its dividend. The theme tying all of them together: huge AI capital expenditures across the group are on pace to reach $725 billion in 2026. These companies are not just building products, they're building a new empire. Whether the returns justify the construction costs is the question the market is going to be asking all year. So, to bring it home, the Fed is on hold, but internally divided. The Magnificent Seven largely delivered, and AI spending is scaling at a pace that would make even Darth Vader do a double take. May the 4th be with you in all that you do. We'll see you next week.